Anyways, thank you all for coming to our Junior Economic Club event today. My name is Lizzie, and I'm the president of the Junior Economic Club of Chicago. So we're honored to have Mr. Chartier here today. The Junior Economic Club was founded in 2014, and we're an entirely student-run nonprofit that introduces high school students to business and economics through member engagement events, forums, and community initiatives. We have over 130 students representing over 34 schools throughout Chicago, as well as 8 other chapters across 4 cities, across 4 countries as well. So you can learn more about the club at junioreconomicclub.org, but now I'll pass it over to Leo to introduce Mr. Chartier.
Thank you, Lizzie. So Mr. Chartier is the Chief Marketing Officer of Innova. He joined Innova in 2013, and he leads global marketing, communications, and the corporate development groups. From 2010 through 2012, he served as the Chief Marketing Officer at Options Express, where he first led the global marketing and business development groups, and then the integration into Charles Schwab following its sale. He was the senior managing principal for strategy at the Simon Group, which was part of MDC Partners from 2005 to 2010, and was contracted as the interim marketing and distribution leader at Cefico Insurance and global product marketing leader at EDS. Mr. Chartier has an MBA from Syracuse University, a BA in economics from the Holy Cross, and a BS in engineering from the Worcester Polytechnic Institute. He is also a former Marine Corps officer and a combat helicopter pilot. So with that, I believe we're ready to get started. Let me pull up, thank you again for agreeing to speak with us, and I'll pull up your slideshow. One sec.
Awesome. Well, while you do that, let me just say thanks for having me. I'm excited to engage and offer what insights on online lending and career paths in marketing that I can. And we have some good time at the end for a discussion. So the topic of this is the evolution of online lending, which I think is a really interesting thing given what we experienced over the past few months, especially. And our agenda is going to be looking a little bit at the trends in personal loans. And then there's key drivers that we look for online lending when we look at entering a country or a market. We'll talk a little bit about that. For the economist-minded, especially business economics people, we're going to talk a little bit about why a fintech has an advantage over some traditional lending models. Some of the macroeconomic trends overall that contribute to online lending, and then what's happening right now. And I'll talk at the end about my role and how I got here. So with that being said, let's kick off into personal loans. Personal loans, so when we say personal loan, we mean a loan typically that isn't secured by property, like mortgage and auto, and not a credit card, so not a revolving product. It's really just something that you're getting based on your work, your income, your credit history. So personal loan as a category since the financial crisis has really grown and almost doubled. And we're going to talk about how that happened. But that top chart shows from 2010 to 2020, you've got a doubling in the outstanding loan balances for personal loans and the number of consumers that are taking them. The bottom half of that just shows that within consumer credit, so there's a larger category, consumer credit, that includes mortgage, auto. A HELOC is a line of credit on your mortgage, on your house. Credit card, PL, that's private label card, which tends to be something a retailer offers to increase sales. So you go to a store, you go to Macy's and say, hey, do you want a credit card? That's so that Macy's can get more sales from you. And then the unsecured personal loan, which is what we're going to focus on, and then student loans. And you can see it's $1.6 trillion market out there, of which unsecured personal loans are just 1% of the overall. So on the next chart, you can see that you had a doubling over 10 years in overall personal loans. But in the past 5 years, online loans have doubled. And year over year, 2018 to 2019 had a very large lift as well. 2019 to 2020, obviously 2020 was a little disrupted, and you've actually had some pay down, but you've still had growth. I think I was just on a panel with TransUnion, and they think it'll be somewhere in the mid to high teens will be the growth year over year, 2019 to 2020, because it started out with growth and then you had pay downs. So personal loan category growing, online lending growing much, much, much faster than that. Why would that be happening? Let's take a look at the next slide. And this, I've flipped now to small business borrowers from consumers. But in marketing, in product generally, what you often see is a small business owner behaves a lot more like a consumer than they do a business. Many larger businesses obviously will have a large management team, they'll have committees, they'll have processes. So when a larger business buys, it's a very different buying experience. But when a small business owner buys something, it's very similar to consumer buying something. Often it's one person making a decision. They do it on their analysis and not with a bunch of help. So you can move between small businesses and consumers, and often you'll see the same criteria being used or the same needs being met. So I went from personal loans now to small business loans. Innova does both of those. And the factors that small businesses value in the online lending product and process are very similar. And we do studies every year, other people do studies every year on why consumers use online loans. And it almost exactly matches what you're seeing right here, although I would say, and I'll get to this in a second, small business owners have one uniqueness that we'll talk about. But when you look at these factors, number one for a lot of these people is, oh, stay where you are, go back one, is that perceived chance of being funded. So people, especially people that have uneven credit histories, get turned down by banks very frequently. So they're very used to, in fact, 4 times more often, non-prime consumer, somebody with a credit score below like 600, is going to be turned down from a bank 4 times in a row before they get another type of loan. So one of the reasons they go online is they feel like they have a fairer chance at credit. There's not someone judging them across the table, or it's all about the data and their history and not other factors. So number one, they're looking for that chance of being funded. They perceive a cost difference, and often there is, because they don't have to support a lender doesn't have to support all the fixed overhead that a bank does. They think it's going to be a speedier decision because the online lenders have had to drive towards speed because they're just pulling a bunch of data rather than a bank that maybe has you submit documents and everything else. The flexibility of the product, we can innovate on product features and functions much faster than a company that has to train its personnel on how to evaluate the loan, how to underwrite it, how to issue it. So there will be more flexibility in the product, obviously ease of application. But where it changes is in the desire for a relationship. And this is the one place small businesses are a bit different than consumers. Many consumers still value being able to walk in and know the person that they're interacting with, and they value that relationship. But small businesses in particular value relationship. Somebody that understands the ups and downs in their business, their personal financials versus their business financials. So relationship is very large for many small businesses. And this breaks out, people that tend to go to banks or traditional lenders versus people that go to online lenders. It's a good visual illustration of why people go to online and what the difference in the product that they're looking for there. On the next slide, what I talk about is, what is it that's allowed that online lending to grow so quickly? And these are actually factors that we use when we look at a country or a market we're thinking about entering. we look for these factors. So first off, online access. You guys probably don't know this, but there was a time people didn't have the internet, or they had to dial up to the internet, or access was not that ubiquitous and available. And in the past 10 years, it's become that way. Online access is very ubiquitous, especially in the United States. So that's a key element that obviously led to growth in online, because you have to have access. The second is there's been an increase in trust in online services. And I always, I have a longer joke that I talk about in this space, but basically for many people, their closest friend is their phone. It's where they go constantly to have conversation and find information and everything else. So the trust in online services has changed dramatically because of that phone in your hand all the time. The third one is a major structural issue that changed in the United States that's really important. The ability to sign a legal contract via an electronic signature or a proxy for an electronic signature. So if someone doesn't pay you back, you can go say, hey, you didn't pay me back, and we had a contract. So even as soon as 15 years ago, you used to have to sign it with a wet signature and then fax, upload it, and then still send the paper document somewhere. So electronic signature is really important. In America as well, the ACH system is very ubiquitous. We have a single system, the automatic clearinghouse, for moving money between checking accounts. That doesn't require any paper, and right now happens between 2 and really, it's supposed to be 72 hours, but most things happen with between 2 and 24 hours. If I go to other countries, they don't have that. Very few countries have a centralized automatic clearinghouse for checking account transfers and payments. And that's a key element for how we do business, because it lets everything move really quickly. And if you later on, you go back in the slide deck, and I have some of this information later as well, that getting the money quickly is an important part of the online lending experience. So the ACH system was really critical. And then data availability. People hear about credit scores, and you've probably heard about your FICO score, and you think, oh, a FICO score. There are literally 50 different flavors of FICO score. 50. There's not a FICO score. There's 50 different ones. Each one picks different information in order to tailor a score. So there's a score they use for auto. There's a score they use for when you apply for an apartment. There's a score they use for life insurance. There's a score they use for mortgages. So they've tailored all these scores based on the underlying data they're looking at. And the underlying data that they look at has really become much more available as we've digitized all the records and history, and everything's flowing so quickly. So they've got a lot more data sources and data to work with, and that's allowed them to create a bunch of different FICO scores. But most online lenders have gone well beyond FICO scores, and we gather a bunch of other data that helps us that we're actually talking to who we think we're talking to. There's a bunch of factors we can look at to help us understand if we believe the person applying has sincerely the desire to pay us back, because that's a key element. It's easy to lend money out, it's hard to get it back. So that's a key element we're looking for in this data. And then finally, what's driven some of this is following the crisis, 10 plus years ago, FDIC, right, the Federal Deposit Insurance Company, put in more restrictions on banks about how they lend so that we wouldn't get into another banking crisis. And those restrictions caused banks to be very careful about, both on the consumer and the small business side, who they're giving loans to. And part of that as well is it built up a bunch of overhead to giving a loan. So that small personal loans are not profitable for a bank. It costs them too much to process it through their system. And so they don't really want to do that. Whether it's a consumer or a small business, they don't really want to do that. And then they can't get it too large on their books because it creates a risk to the system. So those are 6 examples of the most pressing items that actually changed in our economy or the national infrastructure that has contributed to online lending. And as we look to go do business in other countries, we look at various levels of achievement in these areas to decide, is that a place we could do business? So from that, on the next slide, what we'll see is, you know, and you guys know this, you're digital natives, right? You were born in a digital world, but in you know, half or more of the American population, that's not true about. And from an immigrant population, they haven't experienced that either. So there's a large population in America where online is a new concept to them, and they really like it because it allows them, people to apply, and we can instantly pull a bunch of data. Like one of my favorites is we look right into your phone and we track where you've been. And what we found is that people that walk on the right side of the street with the traffic on the sidewalk are much better credit risks than people walk on the left side of the street against traffic, right? It's just the way it is. So we just look inside their phones and figure out where they've been and how they've been behaving. That's a joke, by the way. We don't do that. But people go, wow, they could probably do that. But there's so much data available online, and it makes it easy. We pull it in instant, in a second, in tenths of a second. We're pulling all this data and evaluating it. Because we have all that data and behavior in our history, our algorithms, we use machine learning to develop algorithms and improve them. We use artificial intelligence to constantly update those. So they're constantly looking, they're saying, is this person matching? You know, we have basically 1,000 data points we use and 100 algorithms that are running. And we're looking for it to match between 3 to 5 of those algorithms. And then that creates a segment for a borrower that creates an offer. That's all happening instantly, 3 to 6 seconds as that all comes in. Then they can accept the offer, we can get the electronic signature, we can fund it, and then they can get service for that. Multi-channel, we have call centers. People like to call somebody and have a question answered. Of course, we have lots of other ways for them to do it: chat, interactive systems, and so forth. And then even all those activities and contacts all have analytics running against them to figure out what's best solving the problems people bring to us, so that we can be the most efficient we can be in helping people get to the solution they want. Because in the end, let's face it, none of us even want to have to apply. If we need money, we just want the money. And everything between that is trouble. So the more we can do to eliminate all that and make it more about, I need money right now, I can get it, the better off we are. In the next slide, what you'll see is why an online only, a pure play business works. And it starts with the concept of, what is a company? So a company really is a set of assets, things that you own that have value, a set of capabilities, things you've been developed the capability to do, and then a financial equation, because you need to go get capital to invest in you. And they want to know, how is your financial equation going to work so I understand what I'm getting back from the investment I make in you. And those assets are things like a brand that people recognize, a customer list, the data that's the history of all the borrowing, our software systems we've built, you know, the people, the team members we have, our cash. Those capabilities are ability to market, to know how to run an acquisition channel, to sign contracts, all those things. And when we do that well, it results in return on assets and return on equity. See, I threw in some economic terms to help you guys, you know, get credit for attending today. But that last piece, that's where things get a little crazy, because if a company has invested in a bunch of buildings and physical locations, then that's taking a lot of their capital up, right? And so when they go, oh, and now we're going to invest in software, it duplicates their investment and it makes it more expensive for them. Whereas because I don't have offices and leases and, you know, retail employees, I can spend my money on software and on one office that has a bunch of employees in it that are doing service remotely. And then because we have it all centralized, we can put in those automated features so people don't even have to talk to someone. So that changes our financial equation. And that's one of the challenges for banks. They've got all this infrastructure that costs money, And so it's hard for them to do the software that they need to service these populations we service. And as we saw, it's only 1% of all the lending. So they'd much rather just do mortgages and auto loans, credit cards, things that they understand and can scale and they get paid back on, or they take your house, than focus on personal lending. So it's the nature of capital system and private ownership of capital that caused the equation to work, where a specialization, a pure play, can have advantages over a multi-product, multi-offering, physical-based company. Next slide, sorry. So where are things going? Well, it sort of leverages on itself as you get to there, right? So because we can invest so much in our software and our data and everything else, it just keeps leaping ahead of other companies, especially banks. And so we've developed what we call the Colossus Platform that's taking in a bunch of external data sources. You know, it's taking in some of our internal data sources, all the history we have of borrowing. It's running all those models, and then it's making itself available out to our applications. That is the heart and soul, along with the people of our company. That's what we focus on, our people, and then these software and data analytics resources that really, that's our factory that produces products. And it leaps ahead so fast that it takes constant renewal and investment to stay ahead. So you don't end up with a bunch of legacy code that doesn't perform as well and startups can beat you. You need to be a startup yourself so you don't get beaten. Next slide. So where things are going is the software we use and the data we use is just getting smarter. And that's great because the world's getting more fragmented. And then something like COVID happens. I think there's a question about COVID, so I'll wait to answer that. But I'll just talk about the macroeconomic impact of COVID in the US thus far. These are charts that show the credit inquiries for different product types in the US over 2020, first 7 or 8 months of 2020. And you can see 2020 in yellow, 2019 in blue. So as COVID started to hit, and even a little bit prior to that, but as COVID started to hit, if you look at the mortgage one, top left, people immediately went, wow, things could get hard while I'm still employed. Let me go refinance my house and get some cash out, which people had been avoiding doing for the past 10 years because of everybody that lost their houses during the financial crisis. Also, the real estate value hadn't really come up to allow enough room for people to borrow off their houses. So people were being careful. But when the crisis started to loom, they all went, oh, let me go get some mortgages against my house so I have cash available. And you can see that. On the other side, on auto, you can see people went, I'm not buying a new car. I'm going to hunker down on what I have and not take on any new obligations because we don't know what the future looks like. You also see consumer lending went down. People, one, said, I don't want to spend. But two, they stopped having opportunity to spend. They weren't going out to eat. They weren't traveling. They weren't buying new stuff. They weren't shopping. They were just home, right? So less people wanted to borrow consumer. You also saw the same thing on card, that they stopped using their credit cards as much, probably driven by the same behavior of trying to pay off balances, not increase balances with consumption. So it's been an interesting year where you saw this shift. Interest rates have held low, so mortgage rates continue to stay elevated. People are still trying to take cash out, so they have cash available to protect themselves, right? Autos kind of returned to year-over-year normality. Consumer lending has started to return to year-over-year normality, but it's a bit below still. And then credit card usage has slowly climbed as both, I think, the stimulus has put money into the economy and people are starting to get a feel for who's going to lose a job and who isn't. And they start to have some belief that the economic crisis that's being driven by the public health crisis, that's being driven by the medical issue of COVID, is starting to resolve itself. So they've got some hope. So as we look forward, it would appear that so long as the medical question is actually solved with the vaccine and the public health question gets addressed, you're going to see and government support for the macroeconomic situation continues. It seems likely that growth will kick off again as we get into midsummer or into fall of this year. So that is my presentation on online lending evolution. I'm sure we got some great questions to talk about, and then I'll just give you a couple minutes on me. So a chief marketing officer, what do they do? Well, at Innova, what I'm focused on is trying to get the product out to people, get hardworking people, credit that they need. And we do it to a population that banks aren't as interested. Within that, chief marketing officer is focused on marketing, the 4 or 5 Ps, depending on how you guys have learned them. Positioning, that's strategy. Is there a place in the market that we believe we can service and make a profit? Can we produce a product that's competitive features and functions, in price position, with distribution, in our case online, and then promote it? So I spend my days meeting with teams that all address different elements of this. And I guide and direct their work. I help the management team think about, do we have a good long-term strategy? Are we winning in the marketplace? Let's collect that information and make sure we're doing that. Let's analyze it. For a chief marketing officer, most of your time is spent meeting with either your direct reports or with their teams and guiding and directing their work. Yesterday, I spent 2 hours reviewing new TV ads we made in the COVID world, right? Nobody ever saw each other. And we produced TV ads, and they're good ads. So that can take my time. The media buying to put those TV ads on TV takes my time. And that's part of the promotion. We're promoting the brand, we're acquiring new customers, and we're managing our relationship so that people speak well of us and also buy from us again. And the final thing is taking accountability. That chief title means I'm responsible for making sure what we're doing works for the business and for the shareholders, and not just executing marketing, but making sure the marketing we're doing helps the business run and produce a return. How I got here, probably it's not a great answer, but luck. I mean, look, you got to look for the luck. You got to look for those opportunities. But the world's been changing, and each time I've been right there on the edge of it. And whether it's an economic cycle or just, the shift online, I've been right there. I'm curious, I'm interested, I'm learning. And because of that, as things happen, I got opportunities and I took them. I met somebody one time in an airport who offered me a job an hour after I met him. And it fundamentally changed my career path. Hard work, you saw I have a few degrees. I've had tough jobs, and I've been disciplined when I do my jobs. Relationships, people really matter. I'm doing this because I think it's important. People are important. If I can contribute to you, I want to be part of that. And when you give that, then you get it back. But it doesn't just happen. You have to cultivate relationships. You have to reach out to people. You have to let them know you appreciate them. And sometimes you just have to ask for the help you need. And then finally, I think a little bit, I have a spirit of adventure. I try to stay ready. I take some risks and I let it happen. You can't control everything, but you need to put yourself in a position where good things can happen and then take some risks on it. That is my presentation. So I think we're pretty much on time and we can turn over to questions.
Yeah, thank you. That was fascinating. So we had a couple of questions prepared. And just a reminder, if anyone would like to be called on to ask a question, just chat me. Or if you don't want to be called on, just put your question in the chat. So the first question that we have is, how has COVID-19 influenced Innova's strategy?
Sure. So when COVID hit, we immediately stopped all marketing because we went, gosh, nobody knows, are people going to have jobs or not? Can they pay back? Right. So we shouldn't be out there marketing loans. And then second thing we did is we said, and how are we going to help keep our customers successful over the next few months? So we went all hands into the contact center, working out new payment plans, new offerings we could do that would allow people to not pay back, what they had thought they were going to pay back, all sorts of different activities around, helping the customer stay current, including we implemented, new partnerships that can connect people with social assistance and other things. And then as we've come out of that, well, we used to run a 3-year annual strategy that was really around product development in order to satisfy consumers and small businesses. And instead, now we're more on a quarterly basis of what's happening out there and how should we manage either our existing book or start to lend into spots of opportunity that we see. So we're no longer looking at the long-term product development. We're looking at the short-term, how do we build back our book? And are there different product types now that you've got even a stronger shift online that we should be offering to consumers and small businesses to help them?
Sure. And then Innova, I'm not sure if everyone knows, it's an international company. So how would you say lending in other countries compares to lending in the United States specifically?
Yeah, and I talked a little bit about how we identify countries we can lend in by those economic and infrastructure items. However, there's one that's harder to judge, which is the cultural element. So in America, people believe they have the right to invest in themselves to achieve something more in the future. And there's a lot of hope. We lend into hope. People that say, if I just had this, I'd make more money, I'd have a better life, and I'd move forward. Not every country's like that. Not every country, people believe, if I work hard and invest in myself, I will have the opportunity to do more or have more. It's not like that everywhere. So you got to look at, is there going to be demand that's hope-based demand? Not, oh my gosh, I'm over my ski tips and I don't have enough money. I just need money to pay bills. It has to be people that are looking forward into hope, because those are ones they're going to want to borrow again. The second piece of that is there a belief they should pay back? So in some places they go, yes, I should borrow, but they're not so committed to paying back money that they borrow. And we saw that during the crisis where some countries said, hey, we're not paying our debt back. Sorry. So if you go inside that country, often there's a backstop in social programs that lead them to go, even if I don't pay back, I'll be okay. So I don't know if I'm going to pay back. So we look for some cultural elements around that. Is there usage and so forth? And will people pay back? And then is there sort of an ability to identify an individual and track some of their financial behaviors, whether it's a credit score or not? To do that, once again, those are hard to find. So we were in Canada, Australia, and the UK. English language, that made it easier. We didn't have to have things in different languages. Also, all common law-based states, countries. So we have a common historical framework around lending and borrowing and paying back. So those were great countries to be in. Also, good usage of credit. People that believe, spending a little bit ahead is okay. We were in China, and each time we would go to do something, first off, the data is not available. I mean, it's a hard place. But each time we would go to do something more, the Chinese government would go, sure, that's great. You just need to put $10 million on deposit in the Chinese government national bank. It's not really clear that you're going to ever get that money back. So you go, we got to think hard before we do too much business in China. We're in Brazil right now. Brazil, there you go. It's in Portuguese. It's actually more of a Napoleonic code, historical legal framework. It's not the same as common law, so there's different rights on borrowers and lenders, and you got to understand that. But it's the most exciting and developed economy between Central and South America, so that's pretty exciting. Good growth potential there, so that works for us. As we've looked at other countries, we haven't really, India keeps looking interesting. They've had some law changes that would make it more likely you could get paid back. And they've implemented a national identification system, a national credit score system, and an ACH system. So each country is going to have its own factors that influence how attractive it is to be in business. But the United States, far and clear, has the largest consumer credit and small business credit markets in the world, to the fact that you'd have to have Brazil, UK, Canada, Australia at like 3 times the rate of borrowing that they were at to even be half the US market.
Yeah, I see. And then I suppose looking more towards the future, and you also kind of touched on this, but where do you see the lending industry, and specifically online lending, like 10 to 15 years from now?
Well, I'll tell you what we're working on. A lot of the lending that we have is higher cost. And you only take higher cost credit when the lower cost credit you have access to has been consumed and you have no cash. So it tends to be a usage that's, I need it now, I don't need it forever, and I didn't always predict that I needed to have the cash. Something came up, or I just wasn't paying attention. So we think there's huge opportunity for integration of all your transactional records into a system with AI on top of it, so that your borrowing is as needed and your payback is as needed. And so as you look forward, you're probably going to have more online lending, less physical application and processing around the world, and a lot of it being driven on an AI that's offering you credit as needed, and even the credit you get might come at different prices depending on how much you've consumed, so that you can get very specific on how much you're letting someone have. The general problem right now is if you're prime credit, your histories, you have enough data and your history is pretty stable. So the price points you're looking at might be 1 APR differences as you get worse credit, right? As you come down in your credit score, it's incrementing at 1 APR, let's say, 1 percentage point, annual percentage point rate interest. But when you get to subprime, it used to be before we came into market, you'd go from like 36% to 300% APR, and there's nothing in between. We've introduced all sorts of price points in between there, but the closest we can get right now is a 15% APR increment in credit from a behavioral standpoint. I think as we look forward in the future, we're going to continue to be able to offer smaller increments for non-prime consumers, so that they'll be able to move forward more easily into a prime credit position, because the data will be used to price them more precisely.
For sure. And then I suppose moving on to more of a high school topic, what would your recommendations be for students who are interested in pursuing a career in marketing like you have?
That's always a tough one for me, right? Because I studied engineering, economics, and was a combat helicopter pilot. So I had nothing to do with marketing. And I just came into it because I was doing strategy and the world was changing, and everybody's like, hey, this internet thing's gonna be big, what should we do? And the only people using it were digital online advertising agencies. So I got into marketing. I think, as I work with the teams I have, and most of my, team is under 30, and I work with them on being great marketers, the things I tell them are important is you have to be a lifelong learner, because in marketing, things are constantly changing. So you have to go and say, hey, that's interesting. I'm curious about it. I want to learn about it, and really learn it. tear it apart, figure out how to do it specific to your situations. So you got to be a lifelong learner. The second thing is you have to expose yourself to marketing. In this deck, I've used a lot of data from the credit reporting agencies, right? And they publish on their websites studies on consumer credit constantly. I get emails every time they publish one and I go read it. Well, it's the same thing in marketing. Ad Age, Advertising Week, Marketing Strategy. There's magazines, so they used to be magazines, I don't know what they are anymore. There's publications out there online that will give you weekly, daily, monthly information about what's hot in marketing, what's working, and so forth. There's Gartner, Forrester, those guys study what's happening in marketing, McKinsey. All those organizations have websites you can sign up for their newsletters and stuff, and that'll keep you fresh and interested, and you can see if it's the way you think or not the way you think. And then there's classic texts. I talked about the 4 Ps. I use 5 Ps. That's Kotler. There's great marketing books that are just classic out there. My old partner, Sergio Zeman, who is the father of New Coke. You guys don't even know what that is. But he was the chief marketing officer for Coca-Cola, wrote a great book. So there's some good books to read on it. So I think if you're interested in marketing, you don't have to study marketing undergrad. It helps. You can study business. For a while, we only hired industrial engineers because they really understood putting together digital things in a process-oriented yield flow approach, and they were great at online marketing. So it's not necessarily what you study in undergrad. It's how you think about yourself and what you're interested in and how you engage. And in marketing now isn't you study marketing or English or communications and then go to an ad agency, right? Businesses, every business is controlling its own digital channels and marketing and brand. So there's lots of work in marketing you can do that isn't necessarily because you studied English or psychology in undergrad. Although those are good ways to go about doing it as well, and you can do more of a pure play right into a marketing agency or a PR agency or a communications group or something like that.
Yeah, I see. And then I suppose related to that, since we also have a number of people here interested in finance, what would your recommendations for those students be?
Now, in that case, you do have to study that in undergrad. Finance, right, which is different than financial services or accounting. When I was undergrad, everybody that was going into finance, we actually studied undergrad accounting and economics dual degree, ECOAC. So studying business, economics, accounting undergrad are good ways to go, or finance, to go in a finance career. And you have to think about from a finance career, do you want to be, a controller, a chief financial officer, a financial analyst at a firm? In those cases, as you're studying, you got to get really engaged in the software, because these days, even that group has their own analytics system, their own software systems that they're using to extract data, evaluate data, to capture and do the accounting. It's, there's a lot of software and analytics work involved in finance these days. In addition to, the things you need to understand about ROA, ROE, all the corporate finance things, and what, bonds and stock versus bonds, equity, versus fixed equities and so forth. So I think in finance, you probably should think about studying finance, ECOAC, or business undergrad. But once again, there's another place where you can go online, find something that is specific to finance, go to any of the big accounting firms, go to Goldman Sachs, go to Anderson, Andreessen, sorry. The P firms and the VC firms have websites that do regular reports that they'll send to you, and you can get educated in those areas. I actually, when I left the Marine Corps, took a job at GE in their financial development program, their audit staff, because I was like, that's like a really ordered thing. It appeals to me, and I can be a chief finance officer and make lots of money. And I really enjoyed it, and it was very interesting. And just so happened I did a lot of strategy and fell into marketing, which, by the way, can make a lot of money, and you don't have to be as numbers oriented. So.
Yeah, those are some great tips. So moving on to I believe we have two more personal questions. What does your typical day look like as the chief marketing officer?
I could probably show you. It looks like a calendar that starts at like 8 and ends at about 5:30 and has a bunch of meetings on it. So we do a weekly management team meeting Monday morning that says, what's going on? What are we doing? And, what big decisions do we need to make? And then that sort of flows to the set of what we call one-on-ones, the meetings with either my direct reports or my peers, where we talk about the same stuff. What are our open items? How are we getting them done? What's the performance look like? At Innova, we're very operationally intense. So actually, for example, on Wednesdays, each marketing team for each brand has a 1-hour meeting where they walk through, where the channel owner will walk through the performance of the marketing channel that they manage. So you could be 2 years out of college, 2 months at Innova, and you're in that weekly 1-hour meeting with the chief marketing officer, the CEO stop by, the CFO stop by, and you're talking about the 5 things you did to change a number, the cost to acquire a customer, the volume, and getting questions from the CEO on it. So that we run a very operationally intense business. We pitch the marketing, the analytics, the business performance, the compliance, either weekly or monthly, and people have to present what work they're doing and how it's going and get questioned on it. And in presenting, they don't put information up. They've processed the information. So the level of questions is what I would say is too deep. It's more like not it's too deep to be done, but instead of the first level of, well, what's the information? It's the second level. Why is that information like that? And is it good or bad? And then it's the third level. What are you doing to change it? So lots of meetings where we're talking about those things. What's the performance? Why is it happening? What are you doing to make it different? And then the longer term projects where we've got stuff going on where they're saying, this is where we're at. Where do you think we're going? And then you'll have just the crisis management meetings. But for me, it's very seldom do I have more than an hour open on my calendar for the week in a 10-hour day.
I see. And then our final question, just on the more personal side, would be, what has been the greatest challenge in your career? And then I would add, how did you overcome
Sure. Look, my greatest challenge is I spent 11 years in the Marine Corps. So those 11 years were great. And I actually retired in the Marines. I've spent time on the reserve side and so forth. But if I continued in the Marines, those were 11 years of irreplaceable knowledge of how the Marine Corps operates. And I was at the very pinnacle of how a Marine officer does stuff. And then I moved over, I made like $100,000. And then I moved over to the business world where they went, none of that matters. We don't care. You don't know anything. You're fresh here. You've never managed a P&L. You don't know about financial services. You don't know marketing. You know how to blow shit up. You know how to blow things up, but you don't know how to make things grow. So it invalidated 11 years of experience. Didn't really over time, they went, oh, I see, everything you learned there has a role here. But I still missed 11 years of industry knowledge, of relationships with other people, of growth in my responsibilities and over that time. And it was a big challenge, For a while, I was being offered much lower paying jobs. More than once, recruiters would tell me, you're never going to be a C-level executive. You're not a public company guy. Obviously I stay in touch with those people all the time. I go, hey, just wondering, could I hire somebody from you? Because look at me. But anyways, that was hard to overcome. You know, that whole, like, you're not good enough for this, you're too late. And it was real. They were right. It was difficult. So what I did is I just applied myself to be a learner each place I went. And I went after the jobs that I wanted. And sometimes I got them, sometimes I didn't. But I never said, yes, you're right, therefore I shouldn't try. I said, okay, it's going to be harder. I'm ready. Let's do it. And so I think, you know, if you take something away from that, is that what could feel like a mistake or a barrier, it's, you know, to you at the time, it doesn't have to be, and it's not. You know, your willingness and ability to go forward is what's important, to keep showing up every day and making it work. And that's what I did. And, you know, like I said, I got lucky. Things fell into where, like, strategy was more important than operations. And, you know, I happened to, like, I got a computer when I was a little kid. You know, I happened to be interested in stuff that ultimately came to fruition. But that was a huge challenge. And you know, I worked hard to overcome that. And then I got lucky about my opportunities. But, you know, that's a big thing. And today we see this all the time, because many people go like, well, I worked there a year and a half. I want to learn something new and have a new challenge. And well, if you work at 10 places 1 year each time, have you really learned anything? You know, it's a year's not, like, you have to do something, see the results of what you did, and then make changes and see the results of the changes. So you got to be some like 3 years to kind of go, oh yeah, that they really learned something. So my counterpoint to what I just said is just that, you know, sometimes it's still as important to, like, focus a bit and have something you do. Like in the world of business, what they would say I do is I do marketing as strategy, and I understand transition. So if a company needs to radically change, I know how to make that happen. That's my specialty. I also understand regulated industry. Financial services are regulated industry. And I understand online and offline. I can make TV ads, right? So those are the things I'm known for, and I focus on them. I can't be a CFO anymore. I can't go run a call center. Like, I do the stuff I do, but by focusing down, I've been able to move ahead.
Yeah, that sounds like some really useful advice. So moving on to our more general Q&A, I just want to remind everyone, if you have a question, you can either put it in chat, or you can message me if you'd like to be called on. So I believe, Cole, you have a question.
Well, I see one from Tyler in here too, so.
Hi, my name is Cole, and I'm the CMO at JEC. So this has been a really beneficial presentation for me. So thank you for that. My question is mainly about marketing. So do you have any advice or recommendations for, like, students like us that want to utilize, like, online marketing during this constant stress of, like, the situations that we're in within the world, and kind of, like, trying to connect with students, but it's difficult because of our current circumstances?
Yeah, so I think in online marketing, you've got, you know, online marketing evolved from what they used to call direct marketing. So in direct marketing, you would buy a list and you'd send a piece of mail to that list, and it'd be very targeted. And you'd say, here's the list I want to buy. Somebody, like catalog companies used to say, somebody that's bought from a catalog in the past year more than once, that has this, you know, economic profile, and then they'd mail to them. So when you think about online marketing today, you have to think that same thing. What is the population you're trying to target? And then what things are they active in that you can, you know, be present at as well? Then you've got all the analytics around, you know, keywords, hashtags, all those other things to go. And then how do I, you know, tag it up so that when I go to that place, they'll see me. So if I'm going to go on a social media platform, you go, how do I, one, make sure that what they use, what either the algorithm is using to put things in front of somebody, or what they use to look for stuff, how do I make sure I've got that in content so the algorithm can see it and pick it up and promote it? And then, how do I make myself famous? Whether I borrow someone else's fame or my own fame to get something viral without violating my brand so that I can pick up a bunch of followers because the algorithms pay attention to that. So there's a science behind it that goes all the way back to direct marketing, which is you got to figure out the things that are driving people to engage and then put them into your stuff and then put yourself in those places that they're at. I haven't looked at, high school students in the Illinois area recently, but I would imagine there's probably like some things that are trending. Cole, I'm looking up your TikTok right now, and I'm going to see what you've been doing there. But I mean, that's what you got to do. You got to get content created that's tagged up with the right information that has the right stuff, and then put it in front of them where they are.
Thank you.
And then it looks like Tyler had a question. What are the requirements for small business lending? What characteristics does the business have to have?
So what you often see in online small business lending is you're going to have a company that's assets have already been consumed in borrowing. So they might have equipment leases, but everything they have, they can't borrow against anymore. And what they're really looking for is operating capital, a line of credit, things like that. So typically that's going to be a business that's, say, less than 10 million in revenue. But we're also looking for people that are going to pay us back. So you're going to want between 1 to 3 years of history, so you can see whether or not it's, somewhat successful business. And then it'll be one that probably has between 3 and 50 employees, because when you got 50 employees, your payroll is so large that the loans that we would give, even 300 grand, isn't really enough to help them with their problem. So a small business is looking for working capital, is typically looking for the end of month. I need to make sure I got the rent, the payroll, and then the materials needed to produce my product that I'm going to sell and get revenue for in the next month. And they'll, like take a restaurant in Chicago, and pretend COVID doesn't exist. As you get into spring, a lot of them in downtown are going, good, I need to go get some new chairs and some umbrellas and some stuff to get outside because people are going to start walking around because winter's over. And I need to get some more employees and I need to get some more materials because I'm going to have, come March, April, typically a big lift in volume. And I haven't had sales, so I don't have cash in the bank right now. So when we look at those people, we're trying to make sure, well, year over year, do they actually have that lift? Have they managed their finances properly? So you're looking for the owner to have a good credit rating. You're looking for that, more than 1 year, typically more than 3 years in business. They've produced profit year over year, and they've got stability and some predictability around the business.
For sure. So we're a little low on time, so I think I'll pass it back over to Lizzie to have some final thoughts.
Thank you so much, Mr. Chartier, for doing this presentation and answering all of our questions today. It was really interesting to hear about how not only the trends in personal loans have kind of increased over the years, but also the importance of innovation and kind of considering the different markets. So I think we all really learned a lot, and we really appreciate your time today. Next week, we have another event on MLK Day, so there's no school. It's in the middle of the day. It's a lunch and learn with Seville's Chicago leadership about commercial real estate and kind of the strategies that go into making those kinds of deals. So we'll send out more information about that after the event. But if you want to learn more about JEC or just stay up to date with our events and that sort of thing, you can follow us on Instagram at JEC Chicago or on LinkedIn at the Junior Economic Club of Chicago. So thank you all for coming today, and I hope you have a great rest of your weekend.
Hopefully it entertained as well as providing some good information. You guys take care.
Thank you. everyone.